Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Welcome, everybody, to another episode of the Private Equities Profit Podcast. I'm Cliff Locks, your host. Today, our guest is Stephanie Walter. She's the founder and CEO of Erbe Wealth. After working in the corporate world, Stephanie was looking for more and started her own insurance agency. Her insurance agency was successful, but it wasn't until she was introduced to real estate investing that she saw her future before her. She discovered a way to create the legacy that she wanted for herself and decided to help others create the legacy they wanted to create as well. She started Erbe Wealth with that mission in mind. Stephanie, thanks so much for being on the show today.
Thank you so much for having me.
It's a privilege. Thank you for that. Tell me about your background and how you ended up in the corporate world that you ended up leaving.
Yeah, I guess my path was pretty similar to a lot of people's. I had my degree and went out and got a job. I was an adjuster for an insurance company, worked kind of as a liaison between the attorneys and the insurance company. Was very interesting, but the pay was not great. And I remembered being promised this great raise, and they sat down and talked to me about how wonderful I was doing and everything, and decided that I would be getting a 2% raise that year. And I remember I just bought a house, and I went back and talked to my dad, he was actually a second generation entrepreneur himself. And I was like, Dad, I'm bummed out. What if I do 2% raises for the rest of my life? And he was like, you have two choices here. You can continue working where you are and getting what you get, basically, or you can go out on your own, and what you achieve is really up to you. And so about 2 weeks later, I gave my notice and started my insurance agency after that.
It's interesting how you left the corporate world.
Yeah.
You moved on to the entrepreneurial community and you thrived. What drove you to start the insurance business?
I started it in 2005. My background was in insurance, and thought, it would be a good, business to run. And for me, I ran it for about 16 years. So I did enjoy it.
That's a career, 16 years. You're an expert in that space. What challenges did you have to overcome to create a successful business? And what did you learn in the process?
Well, I think creating a business for me, was ultimately what led me out of the business. The challenges, which were that I had a lot of clients that I enjoyed very much and tried to do everything I could to make happy. But a lot of stuff, I worked actually for a captive agency for Farmers Insurance, and a lot of things, in regards to maybe claims or rates, specifically rates, would be completely out of my control. So I found that frustrating that I couldn't control every aspect of my client's experience. And so, ultimately, I wanted more freedom than what I had there.
I could see the motivation moving from insurance to investing at that point. Very, very good. What introduced you to investing?
Well, actually, I grew up seeing my dad invest in single family homes, and
Mhm.
I started actually investing in single family homes too, in actually right around the same time that I started my insurance business. I started like buying a house, living in it, and then going to a next house, living in it for a year because I was single at the time.
Mhm.
And I thought that was what my retirement was going to be, which was, purchasing these houses and waiting the 30 years for me to pay them off and then living off the cash flow. That
Cash
changed.
flow is king. There's no question to it. And the numbers
Yeah,
work.
it is.
But you learned a lot on that journey.
Yes, for
Yeah.
sure.
How did this change your mindset?
I think it changed my mindset. I always had a different mindset than my friends. I can remember, and I attribute that to my father, just because he started several businesses and rental properties and stuff like that. I can remember buying rental properties, and my friends were like, "Well, what if nobody lives there? What if nobody wants to live there?" And, for me, the risk that I had always, made sense. And that reward that I was going to get, I saw my dad taking on those risks as a child, not, going to a 9 to 5 job. And that was very impactful to me for sure.
So your dad was an important mentor to you.
Yes. Yep. Absolutely.
Yeah.
His name is the Erbe Wealth is German for legacy. And that's
Excellent.
my dad was 100% German. He was
Mhm.
my grandfather was a first generation German immigrant. So that's sort of my nod to him.
I like those legacies. Think about it. You got 3 generations thriving in the community, and entrepreneurship worked extremely well for the family.
Mm-hmm. Yep.
What have you identified as the foundation for sound investments in real estate?
It's changed definitely over time. When my dad, again, he always just said location, location, location. If you'll make money on real estate as long as you don't have a timeline in which you need to sell it. And those are general things. But, as I got into larger, more commercial investments, that's definitely changed. For me, I'm very methodical about lots of different things, and you look at so many more things than you do for just a single family home. And you're looking at, a market, you're looking at the economic growth that's going to happen in that area. You're looking at, the housing that's available. For me, I do a lot of multifamily properties, but
Yeah.
we do like a really, really deep dive, as opposed to when I first started, buying single family homes. It was like, oh, I like this area, and I think this area will
Yeah.
maybe be good in the future, but there wasn't a whole lot more, other than, is it a nice house or can it be a nice house?
What is syndication, and how can it create returns that you want to see?
Oh, yeah. A syndication, that's been around forever. There's been there was a major change in syndications in 2012. Prior to that, basically what a syndication is a group of people go and they purchase a property. There are 2 groups of people that purchase that property. One group that is the professional group that does this for a living, does this, has hopefully done this many times before. And then we find a property, do all of our due diligence, do everything, then bring investors in to invest with us as completely passive investors. So they see reports and they get K1s every year, but they have nothing to do with the day-to-day. So I kind of tell people it's like done for you real estate rather than do it yourself real estate. But the returns are much higher because commercial properties that we target, really, we're looking for value add properties, for properties that, have a lot that are undervalued, basically, or economies that are very undervalued. We
So
call
that
those
due
emerging
diligence on the
markets.
front end is critical.
Yeah, absolutely. And that's my focus is that we want to make money on the buy. There's a lot of pressure in this industry right now to buy, just for future appreciation. And that is not in our model at all.
I'm very, very proud of you. Because there's a large influence or influx of funds coming in from overseas and it's driving prices up, and you're more on the value side and you really care about the investment. And that leads me to my next question. You like to see a 15% or more return on investments for your clients. What do you see that others do not to get such a large return on investments?
Yeah, we're very methodical. We have a small team that might have something to do with it, as well as we don't have a lot of overhead, but we do have a small, efficient team. We know what we're looking for. We're in a market of Florida largely, where we have boots on the ground, where we have relationships built. And now we're going into our 12th deal. My partner and our team is going into our 12th deal together. So we have a bit of a reputation now too, but like the last property we found, every property we look for has to make sense, and have value going into it. So it's a pocket listing. One we just purchased was owned by a group of people in Canada, and they were managing the property in Florida. That doesn't sound that difficult, but it is. And so they just wanted to get out of it because it was a lot more than what they had anticipated. So we got that deal brought to us before it was taken to the market. So when we closed on that, they were estimating that the units were going for about $174,000 per unit. We just had a direct comp sell a few weeks ago where the units were going for $220,000 a unit. So we're looking for, value, and that's really the only way that you can get, those kinds of returns.
Excellent. You're doing your homework on the front end.
Yes, for sure.
I'm glad your team and you are getting, you're working collaboratively together and you're doing right by the investors. Do you see any trends in the real estate world, and what does the future hold? How are things evolving?
That question I hear every day when I talk to people, and that is, I just had the conversation today. So what I hear is, a lot of people are like, I think there's a crash coming. There's, the interest rates are going up, inflation is going up. All of those things are definitely happening. But for us, we are kind of investing in inflation. If you look at it, we're investing in areas of the country that have very, that have a housing shortage. It's that simple. And I believe there was a 60 Minutes it was in March 20th, and it talked about just that there's a 4 million plus shortage of housing in this country. And they happen to focus a lot on Florida, which is where we are. And there's just between the lack of housing and then the people moving in, it's just really a supply and demand. So from listening to that program, it was interesting because I believe too, it will take years for the housing to catch up to where it needs to be. So I don't really foresee a collapse. Yes, I think there could be a recession. We've already gone through COVID with our properties, but by locating the right properties in the right areas, and I could go on and on about what properties are the right ones, our rent collections stayed above 96%. So, again, I don't foresee that there's going to be a real impact to us, but there definitely, other states in which people are going out of, migrating. There's a lot of migration happening in America right now. And so like places in California, I know there's a lot of people leaving there, and New York and Illinois and all of those places. So those are places, if someone had would talk to me about a deal being there, I would say, no, thank you. Because I also, I do all my business in Florida, but I live largely in Colorado. And you have to really understand especially going through COVID, what is the government like? Is it a landlord friendly state or is it not? And that is huge. So finding your specific market and knowing why it's a good market can really hedge against, something that might happen in the economy.
Florida is very, very strict when it comes to the landlord being able to collect the rent.
Yes.
So it's landlord friendly. It's another advantage of Florida where you chose to
correct.
put your efforts into it. What role does mindset play in investing?
Mindset's pretty huge, I think. I mean, especially for me, changing course and being, single family homes, and then learning about syndications. I learned about syndications through a boot camp I was introduced to, and I loved the concept. I love the concept of a group of people being able to buy something bigger than anyone could do on their own. But yes, it's a mindset change that you have to have. And I talk to a lot of my investors about this, but many of them I've learned from myself, which is they really look at cash flow above everything else. And the moment that I switched my focus to that, I do work, but I sold my agency last July.
Okay.
I could be retired, but I enjoy what I do so much, and getting that word out and having people really focus on cash flowing, appreciating, tangible assets. Those are the things that are going to keep you wealthy.
That's a very good message for our listeners. And thank you for sharing that. I appreciate that. Is there anything I haven't touched on that would you like to add or expand on?
Nothing that I can think of. I mean, I definitely think that if anyone in your audience hasn't heard about syndications, to definitely look into it. I guess I missed talking about in 2012, syndications had been around forever, but in order to participate as an investor in one, you had to have a prior relationship with the person that was putting the deal together, had to prove you were a friend or had a prior relationship. In 2012, Obama passed the Jobs Act.
Excellent.
I'm certain one of the benefits that he didn't see was that it opened up the funding of what we call crowdfunding.
Excellent.
And so we're able to, like, when I have a deal, I can put it on the internet. I can send emails out to people I don't know about it. So it opens up a whole nother group of people rather than just maybe that very exclusive group that maybe they were all in the same country club together or something like that, and just opening this type of cash flowing investing out to everyone.
You're working with mostly accredited investors. Am I standing
Yes.
correct? Yeah. Okay, so,
Yep.
Sometimes the crowdfunding is looking at a mix of accredited and non-accredited. Much easier to work with the accredited investor, which is really our listeners.
Yep, we do just accredited.
Okay, thank you for sharing that. How can our listeners contact you? Are there any links that you would like to share?
Yes, I'd say go to my website, which is www.erbewealth.com. And there's just a tremendous amount of information that I put out there. I just put a economic webinar that's in a video section, and my podcast should be going live in the next couple of weeks.
Good for you.
But there's a great deal of information, and I just encourage people to, do their research and look into these types of alternate investments.
It's going to weather through the inflationary period of time. There's no question to that. It's going to do quite well. Thank you, Stephanie, for being here today. Thank you for showing us the determination and chasing for the insights in investing that can help others create a legacy that we want for ourselves. Thank you to our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. The show has been produced by Market Domination, LLC.